Kitco News special coverage of the PDAC convention is brought to you by Gold Mining and Uranium Energy Corp.
Hello, I'm Michelle Makori. This is Kitco News coming to you from PDAC, the Prospectors Developers Association of Canada. This is the world's largest mining convention, and I'm thrilled to now be joined by Robert McEwen. Rob is, of course, the chairman and chief owner of McEwen Mining. Rob is also the founder and former CEO of Corp. He is an inductee of the Canadian Mining Hall of Fame and a recipient of the Order of Canada. So many accolades to list. So good to have you with us, Rob.
Delighted to be here, Michelle.
All right, Rob, a lot of the focus today is what we can expect from the Fed tomorrow. There's some speculation out there that we're going to see a more aggressive Fed trying to tackle that 8.6% jump in CPI that we saw in May. There's speculation that we're going to see perhaps a 75 basis point hike, that there's going to need to be a much more aggressive posturing, even though Powell has in the past said he's not going to go more than 50 basis points. But market chat is looking for more aggressive tightening. What do you think?
Well, they were always saying inflation was going to be temporary.
Transitory.
And it's proving not to be so. So I think they're going to go hard. And they'll pump it up so they can kill it and say, look, it's behaving like we said it would.
You think that the Fed is going to hike 75 basis points tomorrow?
Let's give it that.
All right. What impact is that going to have?
Well, it's going to chill the real estate market further. The speculative stocks and the cryptos are already reflecting it. Maybe they're overreacting. But there's a fear in the market right now that interest rates are going to slow it down considerably, and people are jumping.
On the one hand, there's also the sentiment, let's just get it over and done with. Rip off the Band-Aid, try to get things done as quickly as possible, be aggressive, that there's some regards a call for a more aggressive Fed at this point to show that they're serious about tackling inflation and sort of instill faith back in the Fed.
You have to look back in time and other periods, like through the late 70s, interest rates started stepping up and then really jumped when Volcker came in. If they think they're going to kill inflation with a 75 basis point move, Volcker had to take it to 18%. So it'll be a series of corrections, but it's heading higher because there's so much money out there, it doesn't buy anything anymore. $1. So they have to slow that expectation down.
Do you see a more aggressive quantitative tightening also being announced tomorrow?
I don't know if they'll do it tomorrow. They'll hope that the interest rates just chill it, but that will come as well. You're seeing in the EU, they're slowing down their quantitative easing right now.
Yeah, Bank of England going to make its announcement on Thursday, and the trend is for central banks to tighten aggressively, but it doesn't seem to me as though you're confident that the Fed will be able to tackle this inflation unless it goes into double-digit rates.
Oh, I think, as they say, the horse is already out of the barn. They have created a monster with the monetary expansion and the low interest rates, and it's going to take quite a while to tame that.
Last we heard from Powell, well, a couple of weeks ago, he was still saying that a soft landing is possible. Is a soft landing even possible now? Is a recession inevitable?
I think the Russians use the term soft landing for their astronauts coming back to Earth, hitting not in water, but hitting on the land. That's what I think. We're moving in that direction of a harder landing.
So what does that look like? What is your macro outlook for the U.S.?
Baby boom's going to take it in the head.
Wow. Paint that picture for me. That's not pretty. What does that mean?
We will be looking at a major market correction I would say within the next year or two.
I mean, we already have the S&P down 20%, give or take the day.
That's not enough.
No, how bad does it get?
When we saw the metal market drop the last time, speculative stocks lost 90% of their value. The seniors lost 60 to 70%.
So you anticipate a correction of what, a further 30% here on the S&P, if we're accounting for the speculative versus the non-speculative assets.
I haven't really paid a lot of time on the broad market. I'm sort of a precious metal guy with a copper inclination now, but I could see a major contraction, and it's just being aggravated by conflicts in the Ukraine, prospects of war in the China Sea, other strife going on within society.
And all of these factors usually create the perfect storm for gold. Geopolitical tensions that you've just listed, inflation, uncertainty and volatility in speculative assets, all of these are usually exactly what creates a rally for gold. Now, granted, we've got a very strong dollar at the moment, but shouldn't gold be performing better under these circumstances?
I would like to see it performing better, but it takes time for people to shift from a belief that everything's getting bigger and better to, oh, maybe I have to protect something. And then the gold starts moving.
When you were in Kitco and spoke to my colleague David Lynn, you said that $5,000 gold was not that far off. Not sure what not that far off means, but what is your outlook? And when can we get that $5,000 gold?
Well, I am getting older, and so it's taking a while. But to me, it's just it'd be a few years out still. I was looking at $2,000 at one point, and it got up to $1,940, and then it backed off to $1,200. But I think we have to see more stress in the system, and people looking and saying there are not many other avenues to go. So let's give it 2-3 years.
2-3 years till $5,000 gold.
Yes.
That would mean that things have gone, well, quite wrong. Very, very badly, one would argue, for the US dollar if we hit $5,000 gold in 2-3 years.
Well, you look at China and Russia, and they've been accumulating gold in their treasury. I think they're just trying to create, as many people have said, an alternative currency to the dollar and backed by gold. And whereas the dollar doesn't have that, well, it has some backing, but not to the degree it should.
Well, we have already seen Russia's response to the sanctions is to partially peg the ruble to gold. That has resulted in the ruble being one of the top performing currencies this year. And this idea that you mentioned of an alternative system, of a commodity-backed currency, perhaps a central bank digital currency backed by commodities, perhaps a basket of commodities, gold being one of them.
Yes.
That is an idea that's that's gaining a lot of traction. Frank Justra mentioned that on my show quite recently. Sounds like you're in alignment, that you think that things could be moving in that direction.
I'd be in line with his thinking, yes.
So what does that look like when you say Russia and China have been accumulating gold, which they have, and looking to create a system that's different from the dollar? Elaborate on that for us.
Well, the dollar is very broad in terms of distribution around the world. So it's going to take a while for the dollar to be displaced. But you'd see a lower dollar if you could have other commodities purchased in rubles or yuan. You start taking the premium away. And the gain is, if you can become the reserve currency, then the whole world has to lend to you. You can print with abandon, which the U.S. has done. The world, then maybe we move back into an era where you have multiple currencies, as we had before the euro was created, where you have a lot of confusion in terms of which currency do I hold.
But do you see this idea of commodities backing or pegging or being pegged to these currencies? Because the thinking is very few people trust the Chinese renminbi or the yuan. Russia also has its fair share of detractors, hence you need to have some kind of commodity basket linked to it.
Yes. So if everybody had to buy oil in rubles, the ruble would become a very strong currency because we all need oil at this point. If they put it into food sources, the same thing. Because right now, if you're buying something, you're buying oil, you buy it in dollars, you have to sell your currency to buy the dollars and to acquire it.
Right. So for gold to hit $5,000 by next 2-3 years means the dollar has to lose a lot of its value.
Or
as
gold
well.
go up.
Or gold will go up, but that's usually in response to some.
It could be, but I mean, it could be moving independently on a, just out of a shortage aspect.
What would cause gold to move up that dramatically then?
Time.
Well, that's not a lot of time. That's 2-3 years. That's not a lot of time.
Well, look at some of the moves that have occurred in the market. Look at Amazon. Look at Shopify. Look at a lot of the tech stocks. When the market suddenly decided to get in, they exploded in value. And why shouldn't gold or nickel or other metals not do the same? It's just a rotation in the market from one sector to another and a preference for that new sector.
So you see a major shift in market sentiment going back into precious metals
Yes.
or metals at large.
Well, you look at the expectations in the market, whether it's real estate, it's going through the roof. Everybody has to have real estate. Everybody needs some stock. But when suddenly the mood shifts and it becomes less optimistic, then you go, well, how do I preserve what I have?
Right.
And gold has fulfilled that function over the millennia.
Right. And yet McEwen Mining is focusing quite heavily on copper at the moment.
You look at what's in your portfolio, right? McEwen Mining came about as a merger of two companies that I had large interest in, and I put them together 2012, which was a bad time to put companies together because that's when the metal markets rolled over. But anyhow, one of the assets in there was a copper company, a copper project that happened to be very large. And whenever I looked at it, I said, well, if I converted the resources to a gold equivalent, what would I have? And I said, I have a deposit that's bigger than 60 million ounces of gold. And we did a PEA, and it showed that, well, if the projected cost would be the equivalent of producing gold at $500 an ounce. And the type of production that was projected in the PEA was, at the time, 415 million pounds of copper a year. Well, when I valued it back then, that was like 900,000 ounces. I thought, well, that's not a bad sized deposit. When I built Gold Corp, we didn't quite get that big, but we were low cost. And I thought, well, if I could ever get people to think copper like on a gold equivalent, it was large. So you have this asset. It's longer life than our precious metal assets. It appears to be able to, would generate large revenue, have a good profit margin, and that's sort of exciting.
Of course, we're talking about the Los Azules asset in Argentina.
I mean, you look at the electrification of transportation. There's big demand coming.
And we have seen copper perform tremendously well over the last 2 years, practically double in price.
Yes.
But not doing so great this year, down about, well, not that terribly actually, down about 2.7% year to date compared to the rest of the markets and assets. It's kind of holding its own. What is your projection for the price of copper in the next 2 to 3 years if I've got gold going to 5,000?
I could see it getting softer. If the broad markets weaken, it would weaken as well.
Okay.
How far does it go down? That's a good question. At $3.25, our project's very robust. At $2, we're not going to build it.
Where do you see copper demand coming from when we're seeing some slowing global economic growth? Where do you see the biggest demand for copper for industrial uses coming from in the next 2-3 years?
Transportation, regenerative energy sources, they're all heavy users of copper. A car would be an electric vehicle, 180 pounds of copper, a bus, 500 pounds of copper.
Well, China, I meant more from a geographic position, because China was a big buyer of copper, seems to be slowing down there. Where do you see the biggest demand coming from?
Well, China, they locked everybody in their house. They couldn't even get in a car.
Right.
All the auto producers, at least at this point, are saying they're shifting to electric vehicles. So there's a very large demand factor there. The world wants to be greener, and they want regenerative energies, and copper is a large component in wind turbines and in batteries. the like.
So what is the grand plan for this holding in Los Azules in Argentina for the copper mine?
We're advancing it. We'll first update the preliminary economic assessment. We had some optimization studies done that suggest it could be significantly larger than what envisioned in the preliminary economic assessment. Do an IPO in the first half of next year, and then move it towards feasibility study.
Why break it apart with an IPO?
Oh, well, McEwen Mining is a small, relatively small precious metal producer with this large copper asset. And large copper assets are very cash hungry. So, and our treasury isn't that large. So by taking it out, the market has a preference for a pure copper play or pure precious metal. So we're just creating a product the market's more comfortable with.
Okay, so not to commingle the commodities in terms of market demand is the strategy.
Yes.
Over there.
Yeah, I put 40 million in last summer just to get it started. McEwen Mining will retain a large interest in it and an NSR in the property. So we were doing a private placement, and then we'll do the IPO.
Well, you mentioned that investors don't like to invest in commodities in a mixed bag. That's why you're spinning off the copper project. Which commodity do you think has the biggest room to rally over the next, let's call it 3 years?
It's a balance here, Michelle. Gold, I've always been involved with. Copper, I'm relatively new to. The copper project is bigger, but the gold, I think, has quite a bit of upside. And I think both are going to work in the modern world. One is going to electrify, the other is going to preserve your wealth.
All right. So why choose, is what you're saying?
I have two hands.
Right. Okay. Hedging your options, keeping your options open. I like that. Which brings me to my final question. What would you say is the best piece of advice that you've been given?
Persevere. Push through beyond the obstacles. Most of them are imaginary.
Your obstacles are imaginary. And persevere. Mm-hmm. All right. Well, thank you for persevering through this interview. Really appreciate it. Great to chat with you, Robert McEwen. Thanks for joining us here in Kitco.
It was a pleasure, not perseverance.
Kitco News special coverage of the PDAC convention is brought to you by Gold Mining and Uranium Energy Corp.